Perfect. Yes, thank you for the introduction. I'm happy to talk about some big topic at the energy side, so-called the power purchase agreements. So also one attack also to help industries to have good prices for their industries. And yeah, I've brought some slides with me today to share a little bit. My name, as mentioned before, it's Andreas Lembacher. I'm at Kelag. Kelag is a energy utility in Austria, in the southern part of Austria, and I'm working there for about like 10 years now. I'm heading the commercial optimization department, which is located in the division of energy trading. What we do is we take care about selling the energy we produce as Kelag internationally. So we have productions pretty much spread over whole Europe. And that's the one pillar, the one big pillar. The second pillar is we are also responsible for procuring energy, meaning natural gas and electricity, and also CO2 emissions for our end customers, for B2C customers and industry customers, with particularly focus in Austria. And then the third pillar that's pretty much a little bit new in my responsibility since July is also the thing that Ingo called Origination International. It's this where we try to also think about individual renewable projects and solutions for customers in other parts of Europe, in particular also in the southeastern Europe part. Somehow to my side, when we talk a little bit about Kelag, Kelag, as mentioned before, is located in Austria, in the southern part of Austria, in Klagenfurt, headquartered in Klagenfurt. What we're doing is that, and what we are very proud of, is that we are very much linked to the whole supply chain of electricity or energy in general. So we have a lot of generation. We have only renewable generation with the biggest scale in hydro production. We have also sales and end customers. We have energy efficiency projects helping industries to make their processes or their lightnings, etc., much more efficient. And we also have a distribution grid. So we also located also in the southern part of Austria, in the province of Carinthia. And we also have the trading side from the electricity side. So we take care about also bringing the electricity produced to the end customers on the other side. And besides the pure electricity part, we also have a pretty decent district heating company in our group, covering a lot of parts of heating in Austria. Some more figures about that is like thinking about who are we and who are our shareholders. We would say we would have about 3 big shareholders connected to Kelag. It's the state of Carinthia. It's the big energy utility from Germany. It's RWE, and it's Verbund, so the Austrian big utility company. In some more complex shareholder structure, which I'll not focus too much on, but these are the 3 big players having shares of Kelag. So what you can see on the right here is the markets that we are active at. We are active only in Europe, but spread it pretty much from east to west. So we have production assets in Portugal, we have some in Spain, we have in France, and this is covering also covering Italy, North Macedonia, Bulgaria, Romania, Croatia, Slovenia. So in many countries we are active also for investments into renewable energy, and also therefore we are active in energy trading in all these markets. What is interesting to know, I think, from the Kelag Group side is that we have 2 trading desks. We have one in Klagenfurt in Austria, focusing on the assets that we have, so on selling the energy we produce and optimizing the procurement for our end customers. This is the team that I'm leading in Klagenfurt. And we have a sister desk in Ljubljana, headquartered, where we cover also trigger the southeastern Europe part of energy trading. The company there is called Interenergo, which some of you might know. Our backbone in production is hydro. So you can also see here we have 96 different hydro power plants from Portugal and to southeastern Europe. We have still only under question marks, but 7 wind farms, which is an increasing number. We are highly investing also in wind projects all over Europe. and we have about 30 photovoltaic plants. Generally, also in Austria, we are delivering 300,000 customers for end customers, covered by 2,000 employees the Kelag Group has in total. So this would be the part of the Kelag, what Kelag is doing, what Kelag looks like in figures, in big figures. Getting a more step into energy trading. What do we do in energy trading? If we represent ourselves, or we are talking about ourselves, we're saying that we are like the center of everything that's connected to energy in our group. So we take care of matching generation with sales, bring it both to the market, making solutions for not only our own generation assets, but also for third parties, for external investors into renewable energy. So we try to help also them to market their energy. Here it's also worth mentioning that also we are pretty active in that regard. And so, for example, in Austria, we're covering about 20% of the whole wind production that is in Austria. We are servicing as third-party supplier. And this slide should also show the dynamics and volatility in these markets. And there's a lot of things going on which you all might also be very aware of. Just putting out some of those are like energy communities, of course, is a big topic, in particular in Austria. Heat pumps or solutions where heating districts are changed from fossil fueled to big heat pump solutions, where we just currently have very interesting projects going on. We have about power to heat projects also in this connection. Yeah, many different and very interesting and attractive fields to work at. And there you can also see what is somehow connecting all of those parts and different angles in the whole energy world is also the power purchase agreements topic. And before coming a little to more detail into the topic, I would like to understand a little bit more about the dynamics of energy prices and energy trading. Because what might be a little bit different from trading energy, which not everybody is aware of, to another commodity like gold or something like this, there's always one price of gold. It can be a spot price or can be a forward price, but the underlying is always the gold itself. That's very interesting to understand that power is different because electricity is different, that there's not this only single electricity, but electricity always has a time unit connected to it. It's electricity worth today. It's for this hour, for this minute, for this next 15 minutes, for electricity worth for next month. So, this is very crucial to understand that the prices pretty much are changing over time and depending on time. And that's also what this slide should a little bit show, that and the reason for this is simply isn't that you cannot easily store electricity like you can do for natural gas or for gold or something like this. So the volatility and the dynamics of electricity are just also in the end very physically driven, and the reason for not being able to store this in a big amount just leads to different cost structures over time. And this whole market, we wanted to show into a little bit perspective, starting on the left side with the very physical world, where it's about really getting the electricity grid on a stable level, leading to this 50 hertz that needs to be there on frequency, so that we don't lead to any problems, or in worst case, any blackouts for electricity supply, also for end customers and industries. And these are the three first guys here. So the FCR, AFR, and MFRR are really the short-term solutions for the energy markets, also like very much regulated from the grid providers to merely make stable that the whole energy market is not collapsing and working very recently and flowing fluently. Starting with the intraday section, it's interesting that the free market trading starts. Let's call it like this. So for now, intraday trading, it's like currently it's 11:10. So until now, the 15 minutes trade from 11:15 to 11:30 is being traded from the market players, where they really evaluate the last changes in production and demands. So just to make a market equilibrium price for the system. So this is very a short-term forecast, which is in particular interesting in terms of renewable energy, because I think any of you will know that there is this PV production that is like increasing very steeply in terms of when the sun shines heavily, or also the wind turns up. And the next step where we think about 1 day ahead is like the day ahead market, so called it. So which is also another interesting thing in the electricity world, is that when talking about the spot markets generally in the financial sector is always contains like, this is the price a certain good has now. In the electricity world, it's not now, it's the price for next day. So you have this 1 day delay that somehow seems a little bit weird in the beginning, but has the trigger of a reason for being to organize all the deliveries and the setups in the infrastructure to be able to work on a stable world. And what has been recently developing over the last years, or is trying to develop, is the longer term securement. So until now, there has been only one very long-term price securement methodology, let's call it like this, which is state-owned long-term contract. We call it like here, we call it support schemes, feed-in tariff. Newer things are CFDs, so contract for differences, that this where the state is somehow helping investors to get a stable cash flow to invest into renewable energies to trigger this. And what have been a very recent topic in the last years, just to say, okay, what could be a market solution supported also there is the PPA topic. So under PPAs is a very general topic on wording. It's like power purchase agreement. So it could be anything connected to power, obviously, but generally the market understands PPAs on contracts from starting from 2 to 3 years up to 10, 15, 20 years. So when talking about PPAs, you're talking generally about very like longer term contracts to being able to have a stable cash flow from sides of the investor, or as a stable procurement price in sense of seeing it from the customers. Those different price technologies and pricing rules somehow also have a different context. So as I said before, those guys on the left side, they are very physically connected. So if the grid frequency is not good, we need to work on making the grid stable and so on and so forth. Whereas as long as you go into the future, the more financial the services get and the pricing gets. So I think this is as mentioned before, this is a crucial way of understanding that the electricity price depends over the times and have different angles and different views. So when now talking about general structure of a PPA, so when we said already before, PPA is generally something more long-term or more secure somehow. And what it is, in easy words spoken, you have an asset, wind, the solar, something. Also PPAs are normally connected to renewable projects, and you have end customers on the other side, and you want to simply agree on a price. It sounds easy. The problem is currently that it's not too easy to agree on a price for 20 years, for example. So what's the fair price for 20 years delivery of electricity from out of a certain project? So this is a little bit the tricky point, which will come also later on a little bit more. And we can distinguish between two categories. We try to organize it like this in the slide. So it's about the pricing, it's about the settlement, and it's about the duration. Durations, as I said before, typically it's like 2-3 years starting up to 20. This is one big pillar as well. The second thing is about pricing. We distinguish between a fixed price. So we really say for 20 years delivery, we agree on 70 euros per megawatt hours. That's the price we get. Or you can also have index prices. Index prices in terms of spot market prices, so really like short-term indexed versions, where you don't have any price fixings at all, or you can also like deviate it on some certain also price indices. Like there's in Austria, for example, there's called the ÖSPITZ, the Austrian Power Price Index, that is somehow a reference price level for many guys. And which is also pretty recently an interesting topic, is the settlement structure. The traditional world of utilities comes out of this physical world. In the end, it's about physics. It's about supplying energy to customers, and that's pure physics. The longer it gets, we said already before that the more financial it gets. Many customers are not 100% also interested in only like the physical supply, but they want to secure something. They want to secure a green energy service of electricity, or they want to secure a cash flow. So also financial solutions started to be part of these PPA discussions. Some also call it like VPPA, so virtual power purchase agreements, where you just are simply like in the financial sectors, where maybe you know the situation of changing fixed versus floating loans, for example, in banking sectors, etc. So these are the key things. So it's about pricing, it's about fixed prices versus index prices. It's about, is it physically delivered, or is it just a financial hedge? We also say to that for customers, and the duration itself. Yes, and that's one way of understanding PPAs. And the second thing is distinguish between, are we talking about, and we really liked also this as Kelag, because I think it's an easy way to understand the PPA world. Are we talking about upstream? So are we talking in terms of an investor that has invested into an asset and he wants to market the electricity to someone else? So he's bringing it up, up into the market, or are we talking about the downstream PPA world? So downstream meaning, okay, bringing the energy to the industry, to the end customer. And in that regard, you can have the on-site version of it, a corporate PPA, where you really build up a certain PV project at the rooftop of an industry. So it's a corporate PPA then called, or on the left side, the utility PPA. On the other side, just, okay, you're just simply investing into a renewable asset, and you want someone like Kelag, for example, to market the electricity produced out of it. And this is then called just a utility PPA, because you're doing this PPA contract with some utility that's somehow offering these services. And in the middle, you can see also the intermediary PPA world. So intermediary PPA just means that the utilities like Kelag are helping an investor and an industry, like matching each other. Say, okay, making the delivery of energy from the production to the end customer itself. Seeing about the power purchase world, it really differs a lot how mature this market is and how many power purchase agreements for longer terms are actively traded in these different countries. We brought also a map here to representing the markets a little bit. The more dark it is, the more established PPAs are. Like one of the core markets where PPAs are really common in Europe is Spain. There you can see quite a lot of PPA transactions in the market. In the southeastern Europe part, where also Interenergo, a Kelag company, is active, it's still hard to really sign any longer term PPA contracts. And one of the underlyings there is also that the forward markets, the energy trading markets, are not that far developed yet, as for example in Spain or in Italy or in France. It's also sometimes also like the difficulty to finding some suitable counterparties, and also the price discussions are turning out to be very hard, because this is what I wanted to say already before, is how to agree on a price for 20 years. So who tells us what is a fair price for like next 20 years? And also it's rare to find for some industry customers to say, okay, how actively are you really planning like 20 years upfront, and do you want to secure like for 20 years upfront already some electricity prices for yourself, for example? So this is then the hard discussion. Like the investors or the producers, they really are keen on getting these long-term contracts, because for them it means the stable cash flows and so on. On the industry side, we see currently the challenge that only a few companies are really like actively looking for really that long-term contracts to procure, because you're just also like fixing your energy costs like for 20 years. And of course, this could be a good deal, but it's also a dangerous deal because you can see in the last years, price developments of energy prices have been pretty volatile. So we went from COVID downsides of, I don't know, 20 euros to like 1,000 euros after Ukraine Russia inflation. So it's a it's a big game. It's a hard job. So that's why we see a lot of issues currently in really finding those PPA offers for 20 years, let's say, pricing. So what are the things like maybe the key takeaways, let's say like this, that I would like you to remember, maybe also from today's presentation that I just shortly gave you. The PPAs are like a very important part of let's say a new way of energy market, and it's an instrument meant for helping also the investment into to renewable sectors, to renewable assets like wind and solar in particular, also heat and hydro. The idea would be that it could be very customizable and very face the industry needs and very specific from customer to customer, to really also be flexible in terms of pricing, of being structured, of being physically versus financial, and on the other side also to help the investors to secure the cable flash flows. And so that's the theory, that if those two sides work together, we can on the long run invest into a lot of new renewable energy sources in Europe and bring the energy price down together on the longer time to decarbonize also our electricity supply in whole Europe. That would finish my keynote for today. So thank you for the attention.